Retail sales are going down right now and feeling the pinch because of changing consumer patterns. But when you talk about the appetite in the markets, that's certainly going up. Today, the Nifty has hit a record high. It's a new record, broad-based rally, really. It's day after we've seen the state election exit poll results coming through and the second quarter GDP growth also coming in, which has beaten estimates at 7.6%. FIIs too have turned positive in November. So where is the Nifty's next pit stop? Let's understand this. Sunil Subramaniam of Sundaram Mutual joining us to decode this. Mr. Subramaniam, we've hit this 4 trillion mark in market cap. It's happened for the first time ever. Tell us, what are the risks that you see that we need to be cognizant of?
I think from a risk perspective, I guess one of the major risks which was there was that the state elections would go against the government. The opinion polls so far have not indicated such an event. So I think that on Monday we will know the actual results, and so that's one risk if the actual results do not reflect the opinion polls. The second risk is of inflation. I think food and vegetable prices have been going up. One hopes that the government has enough stock in the granaries of the FCI godowns to manage this before the election. Otherwise, if inflation persists at a high level, then we will have to look at the factor that the return of the NDA might not look so assured as it's looking now. The third is oil prices. While currently the news around oil prices is that we have a stable outcome, and with summer starting from March, we shouldn't expect a spike, but one never knows about geopolitical tensions and what happens. So oil is one thing which one should keep track of. So from a risk perspective, I would highlight this as a main risk, right? Because in the U.S., from the international front, it's clear that the U.S. is pretty much on a slowdown path, and a Fed rate cut sometime in the year 2024 is along the way, which is a positive thing for overall equities and including emerging market equities. So that shouldn't be of concern to India.
Yes, indeed, Mr. Subramaniam. But, this continued traction we are seeing in the broader markets, are we in thoroughly risk-off mode, do you think? Or can we expect the mid-caps and small-caps to run up further from the kind of levels they're at right now? What do you think we're going to see in the broader markets next?
I think there is scope for it to go higher for two reasons. One is that we've noticed that the 30% year-on-year growth in the SIP book has almost come in the mid and small cap segment. So today, mid and small cap together account for 30% of the SIP book of 17,000 crores. So you have 5,000 crores of buying power coming into mid and small caps every month into fund managers' hands. That's number one. The second aspect to look at is that the return of the FIIs. You saw September and October, FIIs were pulling out, hence fund managers actually started buying those large caps and maybe not so much the mid and small. This month, we have seen more than 10,000 crores of FII money coming in, and hence, with the large cap valuations trying to go up, fund managers will again start reallocating away from large caps into the broader market, so that buying power will come in. The third thing is that you don't need the same amount of money to come into mid and small caps to make the price rise equally. The reason I say this is that the floating stock and the liquidity at the small and mid cap levels are much smaller. So even rise in the price. For example, the BSE 500 index, you have 500 stocks there, but the top 100, which is the large caps, account for 72% of the market cap. The balance 400 stocks are accounting only for 25% of the market cap. So you can imagine the kind of rise you can expect in mid and small cap if even a little bit of liquidity support comes in. So I think given that the FIIs have clearly started coming back, the GDP numbers are looking good, the GST collections are also indicative of a buoyant economy, I see that the return of the FII will mean inevitably that domestic fund managers will reallocate more into mid and small caps. And with the power of the SIP book coming to their help, I think that as long as this situation persists and none of those risks that I pointed out actually pans out, you will actually see the broader market reaching higher levels before the elections.
Mr. Subramaniam, talking about the GDP numbers in particular, we've seen the kind of growth that has been reported both in manufacturing and in construction. Do you think these are the pockets in the markets as well that we should be hoping will show that much more traction in times to come? Which are the pockets you think are going to outperform and show leadership?
Yes, it is definitely seen that the manufacturing sector, even from the government side, the focus has remained there. But one must be aware that the market has been anticipating this, and a lot of incremental money has flown into manufacturing and related infrastructure, capital goods sectors over the last few months. Hence, valuations there are quite reasonable, and the numbers that come through there will be justifying the valuations. But where I see there's a pocket of growth is in the consumption sector, especially in the discretionary consumption. As you were just pointing out, FMCG and the low-end consumer goods are probably not seeing that kind of a growth. But consumer discretionary, the high-end cars, SUVs, the bigger houses, these are seeing strong traction. And I think that they haven't yet got the amount of capital allocation which their earnings deserve. The second is, with the election season coming up, you would expect that a lot more money would be spent by both the government and the opposition parties in terms of the economy. So that will go to the bottom of the period, and I expect consumption to actually post good numbers in the next 2 quarters. So I would say that the initial rally I would expect now to happen more in the consumption space, while the infrastructure and capital goods will justify the valuations that are already existing in the market space.
Very quickly, what do you expect will happen with the financials, especially the Bank Nifty?
So I think that what's happened in the Bank Nifty is that the key aspect is, one is, of course, the merger of the HDFC with HDFC Corporate has meant that a lot of fund managers have had to pare down their exposure because single stock exposures are limited to 10%. So there has been some amount of selling there, and hence, despite good results, you've not seen that pack move. But apart from that, the other thing is the recent announcement by RBI of increased weightage on consumer loans and also on NBFC loans means that additional capital will be required, and hence the banking segment has not got fresh amount of capital in terms of buying power, because people would like to wait and watch how this pans out. But I still see a lot of room for growth in the PSU banking space. And the reason I mentioned that is that they have strong CASA books, they have very wide network of branches, and their exposure to retail is not that much. And as you mentioned about manufacturing and infra, in the coming months, as you see that growing, PSU banks will be at the lead because they are largely corporate banks in terms of lending there. So I think that there is a huge valuation gap between PSU banks and private sector banks. And to some extent, a valuation catch-up story will continue in the PSU banking space and will hold up the overall Nifty banking space in the short term. But in the medium term, I think this capital not going into the large private sector banks, that's a situation that's temporary. And I think that with the loan book growing in the coming months, that will also set right. So I think that just that initially there will be a more rally in the lower valued banks like PSU banks, but later the larger banks should also catch up. I think that from a 12 to 18 month perspective, that's a good safety sector to hold in your portfolio.
Things considered, Mr. Subramaniam, what's the next pit stop for the Nifty?
I think that giving levels is hard, but I think another 1,000-point rally before the elections, I don't rule out.
Fair enough. We'll leave it there. Thank you very much, Sunil Subramaniam. Always a pleasure getting in your perspective on the markets. Thanks for joining us on India Tonight.